Hey everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market update. Right now, the net asset of my account is 69,736.96. Today, Apple has closed up 0.06%, SQQQ closed down 2.95%, SPY closed up 0.83%, and United Natural Gas closed down 1.62%. Today, the market generally closed higher. Nasdaq closed up 0.95%, S&P 500 closed up 0.82%, and Dow Jones closed up 0.4%. Today, the tech industries led with a gain. Software infrastructure closed up 0.18%, and semiconductors closed up 2.56%. And today, Dow Jones hit a record high for the 10th time this year, with the S&P 500 approaching the 5,000 mark. Overall, the stocks closed higher as the middle of the quarter investors were reviewing a batch of new interest rate cuts and interest rate expectations, and also the Q4 financial reports. And let's talk about the Fed's prediction for the next rate cut, the later quarter of this year. On Wednesday, recently, Fed Chairman Jerome Powell suggested last week that investors may have to wait longer than expected to see a shift in central bank policy. He always reiterated his views, leading to many think about this year's rate cut could be less than previously hoped. His hawkish comments largely crossed the market expectations of a Fed rate cut in March and prompted traders to reduce their bets on a U.S. rate cut in May. Head of European equity strategist at Barclays said that, but strong growth means the last mile to fight inflation, and it is tricky for Jerome Powell to maintain a higher and firm hawkish stance towards the Fed interest rate cuts so that the investors would not be celebrating in advance and leading to the danger of inflation rebound. Other Fed spokesmen also backed Fed Chairman Mr. Powell's hawkish tone. Cleveland Fed President Mester warned that to not cut interest rates too soon, suggesting it is no hurry to start cutting interest rates, saying the Fed could be more confident in cutting interest rates later this year if the economy develops as expected. Mester said, a strong economy allowed policymakers to patiently decide when they plan to cut and how much they would cut the interest rates by. Minneapolis Fed President Neel Kashkari welcomed the recent drop in inflation, but stressed that the central bank had not yet met its anti-inflation target. He said, we need a few more months of inflation figures before a rate cut, and the Fed is not currently looking for a better inflation. They're just looking for more firm statistical evidence that it's around 2%. If we can see that figure in a few more months, the Fed will think that it's a lot more confident to give a rate cut. The Fed's current December forecast shows that the median forecast for Fed officials was 325 basis points cut this year. So the Kashkari's 2-3 cuts were slightly hawkish, though market pricing implied as many as 5 cuts. Kashkari said there is no monetary policy vote this year. The Fed has kept interest rates unchanged since July and suggests the next move could be a rate cut. Several officials, including Jerome Powell, have said that there is no rush to act, prompting markets to delay the predicted first rate cut to May or June. CMC Markets chief market strategist Michael Hewson said, events over the past few years show that the market is trying to wait until later this year and the impact of any delay on asset prices and valuations. He said, while Powell surprised the market by bluntly ruling out a March rate cut, this week also provided an opportunity to see if other members of FOMC agreed with his idea. At the same time, the market is also focusing on the risk of a banking crisis. In the US, shares of Community Bank in New York plunged after Moody's Investor Service downgraded its credit rating to junk status. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.